the reason why I produced all that information was so you would know how to trade a situation like this. Because if you don't know that when the market usually breaks through support levels, if you didn't know that when it usually does that, it does it with a lot of momentum. Rarely will you see the market do this. Now, around news events, let me be very specific. So when there's a reason for the market to move, if it's going to take out support, it's going to blast through support when there is a news announcement. It's not usually going to do this. Okay, so if you didn't know all of that, then there's no way that you would really be able to react very well to this particular trade. Okay, you wouldn't be able to take some of your position off when it got down here because you saw momentum slowing down. And you wouldn't be able to react as the market started to flip back up and take part of your position off because, again, it's not blasting through. So it's not just enough to know when to trade. You've also got to know how to trade. Okay, and even if if you had some kind of indicator-based or some kind of mechanical system, because of the volatility and because the market would be ahead of the indicator so much. Again, you wouldn't, if you didn't know how to trade, then you wouldn't know how to react to this. So here we can see the Swiss pushed down and is now retracing back up. Okay, now if we look, let me go to a higher time frame. Oops, pushed the wrong button. So here's our half-hour bars. Now you can see now the half-hour bar is showing, what's this? Bullishness. Okay, it's showing that there's buying coming in. So again, if you have a position on, what does this mean? Well, if the market continues to move up, then you know that the buying down here is following through. But you also know that if the market gets going down, what is it going to have to do? It's going to have to accelerate. Why? Because all of these buyers down here are going to have to be overwhelmed. Okay, remember, let's follow through with the thinking process here. If the market was bearish, then the market would have just pushed through. Now, by the market, I'm talking about all of the traders that are out there. It simply would be selling. It would continue to move down on this 15-minute bar. Sorry, I thought I was on a half hour. So we know that in order to continue moving down, traders are going to have to push through the bullishness which exists here. Okay, remember, there was a report which came out. The report said that retail sales came in lower than expectations. Or, I'm sorry, the retail sales decreased. So because they decreased, the marketplace interpreted that as dollar bearish. So they started pushing the Swiss down.